Yes. So now we have completed fundamentals chapter. Getting it? The next chapter that we need to start is company audit. For me, the company audit, audit reporting and standards, all three together are treated as one segment. These three you have to be very perfect in order to score 35 to 40 marks. It may be in the form of MCQ or descriptive. All put together, MCQ or descriptive all put together, from these three chapters you will be getting 35 to 40 minimum marks. Getting the point? Now, if you look at the ICA material, company audit chapter, if you look at, Caro is covered in that chapter. But in our book, Caro is covered as part of audit report. Caro is covered as part of audit report. If you look at audit report chapter, you will not find Caro in the ICA study material. So a slight shuffling will be done. Are you getting the point, all of you? Then further, company audit is there, right? In company audit of the ICA book, in ICA book, company audit is there, right? In that company audit, they even covered about the concept of company accounts. In ICA book, company audit chapter includes the concept of company accounts, like section 129, 129A, corporate social responsibility, NFRA, all these provisions. This is nothing but CA Inter 9th chapter, company law 9th chapter, accounts chapter. Now in the CA final audit, company audit book, dividend provisions are covered. I'm telling you, section 128 onwards it is covered. I'll just give you a clear idea. What is covered in ICA material exactly? They covered in ICA material section 123 to 127. This is nothing but dividend provisions. This is nothing but dividend provisions. But the ICA material which is given in the CA final audit, dividend provisions, they are not detailed. They just gave a formality sake. They didn't give detailed provision. Getting the point? But MCQs asked on dividend provisions in audit subject were in depth. They are in depth. So that's why what I will do, for dividend provisions, we will give you a revision class which we conducted at CA Inter. Because in CA Inter, though you call it as revision, it is very in depth. The concerned material will be given to you. The concerned revision class will be given to you. If you still want regular class, that regular class also I will add in the Google Drive. Getting the point? I will add in the Google Drive. This is last priority in company audit. In company audit, this is last priority. Generally, till date there are no questions, but in one MTP, I saw an MCQ question of this. On rate of dividend, there is an MCQ question. Rate of dividend is how much? It is based on proviso to 123 subsection 1. The relevant provision under Companies Act is proviso to 123 subsection 1. There is a proviso. Based on that, MCQ has been designed. That related information is not there in the book, ICA study material. That much in-depth ICA study material did not contain, but MCQ was asked in depth. Able to understand? Like, what is the reason? Probably the person who is setting up the paper might have used some RTP or MTP or even CA Inter material might have been used for dividend topic. Or he might have been given it, he might have given or he might have designed based on the act. Able to understand? So, in CA final, company audit, dividend provisions are covered, which is not in depth. That's why we are following for this which material? CA Inter material, which is in depth. Hardly 2 hours time it will take for you to cover dividend provisions. If you watch that revision class, it's only 1 hour. 1 hour. Whatever I am giving in that revision, just take a note of it. That's enough. No need to even have a separate material. Descriptive question, by no chance it will come. No chance at all. But if at all it comes also, you can definitely write. Getting the point? Then 128 onwards to 137. Getting it? 128 onwards, books of accounts, financial statements, NFRA provisions, CSR, 135 CSR, 136, 137, financial statements filing, all that, annual return filing, all the annual return is 92, financial statements filing with ROC, all these provisions are also covered. Again, these provisions are discussed very minimum in our audit book. ICA book only I am telling you. They were discussed just for formality sake. but an MCQ may be asked in depth. So for this also what we need to do? We need to follow CA Inter same revision. Getting it? For all this, what I did is, getting it? Or what I did, whoever is Google Drive, like for Google Drive students also, this is the same instruction. Getting it? For you, what you need to do is, for all this, you need to go to my revision marathon, CA Inter Law. CA Inter Law revision is there. So you just have to go through that. I'll show you. Right now I will show you. Just keep a mark. That is more than enough for you. Please watch it after the end of the chapter. Right now it is not required, but after the end of the chapter you can watch. So let it load. So if you go to my YouTube channel CA Harsha, you will find playlist. CA Inter Marathons will be there. Inside that CA Inter Marathon, Company Law Marathon will be there. Company Law. Inside that we have given a playlist. So timestamps were given in the notes. You can see on the YouTube scrolling itself, you will find timestamps. In that you go to dividend, go to company accounts topic. Altogether 2.5 to 3 hours content will be there. Getting the point? Why I am asking you to refer that CA Inter notes? Because CA final whatever is given in the icai material is not proper. It is very nominally covered. You can cross check with the actual provision given in the CA Inter material and cross check with the icai study material. You will understand how much was eliminated. But an MCQ question might come in depth. Just to watch that revision marathon, I have given a flowchart diagram also, and I even read it from the CA Inter material. Dividend provision, accounts provisions. Just to watch that marathon and then take a quick notes, that's more than enough. You clear? Now, so I spoke about 123 section to 137. Getting the point? Now 138 onwards we need to discuss under company audit. 138. But 138 section is talking about internal audit. What is it talking about? Internal audit, for which we have a separate chapter. We have a chapter called Internal Management Operational Audit. We have a chapter called Internal Audit, Operational Audit, Management Audit. There, 138 section will be discussed in depth. Are you getting the point? So, 138 I will not be discussing under company audit chapter. Even in the ICS study material also it is not covered. Getting the point? Because of section continuity I am bringing this. So, 123 we started. Up to 137 I clarified you where you have to watch. Getting the point? See, if at all we discuss that also, it will be too heavy for us. Able to understand? Normally anywhere else these provisions are not discussed. Dividend provisions, accounts provisions will not be discussed anywhere. But I am showing you my CA Inter lecture. Getting the point? See here. So if you go to the playlist, now you will understand CA Inter revision. You can see here CA Inter revision, paper 2A, company law. Yes or no? You can see here. If you look at the timestamps, getting it? You can see here. You need to watch from 3rd hour 43rd minute. Getting it? Dividends provision is there? No. From here you need to watch dividends, accounts of companies. That's it. So 3:43 to 7:15 means roughly 3.5 hours it is there. Not 3.5, 2.5 to 3 hours. 3 hours 15 minutes something it will be there. So this 3 hours if you watch, I'll guarantee if an MCQ comes you will not fail. But this is last priority. Since it is CA Inter, we cover all the provisions in depth. Though it is a revision. Regular class will be 20 hours. These 3 chapters put together, it is 20 hours regular class. At CA final, we can't afford 20 hours, only on this topic, which is also doubtful. But in one of the recent MTP, I saw this question. That is why I'm hinting you. Getting the point? So you just go to my P2, November 22 attempt marathon, law marathon. Provision is same, no changes at all. Even 129, a new section I told, right? That is also there in this. Getting the point? You can see here accounts of companies, dividends and accounts of companies. These 2 timestamps you have to watch until it is finished. Whenever it is possible for you, go and watch. Whenever it is possible for you. Okay. But by the end of this chapter, try to finish it off. Try to finish it off by the end of this chapter. Even in the ICA book, no illustrations were given. Even in many RTPs, MTPs, no illustrations were given. Only in one RTP or MTP, I think MCQ was given. So, clear, confident? Now, the actual provision starts from 138. But 138 is not covered under company audit chapter. 138 is covered under which one? It is covered in internal management and operational audit. In that chapter, it is covered in depth. Okay. So now technically we need to start discussing from 139 onwards. Okay. So what are the list of sections that we have? 139 to 148. 139 to 148. 139, 140, 141, 2, 143, 144, 145, 146, 147, 148. 139. Appointment and reappointment of auditors. 139 is the biggest section in this entire series. 139 has almost 9 subsections. Getting the point? Because it has rotation provisions, it has casual vacancy provisions, it has appointment of provisions, all that. Okay. Then 140, removal of auditor and even resignation by auditor. Both are discussed under 140, which is having 5 subsections. Getting the point? Then 141, we are having qualifications and disqualifications of auditor. 142 is talking about remuneration of auditor. It is talking about remuneration of auditor. 143 is talking about rights and duties of auditor. Sometimes they may use the word rights of auditor, sometimes they may use the word powers of auditor. Both are same. Getting the point? Next, 144, prohibited services. What are they? Prohibited services by auditor of a company to the company. Getting the point? Prohibited services by an auditor. Nothing but. 145, duty to sign the audit report. Whoever we have appointed as an auditor, he has a duty to sign. Who will sign the audit report? All that is covered under 145. 146, it is again talking about duty. Duty to attend general meetings. Duty to attend general meetings. By mistake, students may write annual general meeting. No. You should write simply the word general meetings. 147, penalty provision. 147 is what? Penalty provision. 148 is talking about cost audit. And in this entire content, we are going to cover it under Companies Act. Now, 143, it is having many subsections which are talking about reporting requirements. It is talking about reporting requirements. Reporting requirements we will be discussing under audit report chapter. Instead of discussing under company audit, we will be discussing it under audit report. So by the time we complete audit report chapter, all the provisions of company audit will be covered. Able to understand? Anyhow, at every stage, I will show you the ICA study material also parallelly, whether it is covered or not, because no, we must have grip on ICA material also. Able to understand? We must know each and every point in ICA material, whether it is covered or not. It will give you confidence. Okay. So that's it. So we'll continue with straight away 141. We'll start with section 141, which is actually talking about qualifications and disqualifications of auditor. Okay. So we'll take a break and then get back. Fine, all of you? So take a break and come to the next one. So the next one, so the first provision that we are going to discuss is 141 section of the Companies Act, which is actually talking about qualifications and disqualifications of the auditor. So it has 4 subsections. It totally has 4 subsections: 144 subsection 1, subsection 2, subsection 3 and subsection 4. 141 subsection 1, it actually talks about qualification of an auditor. In order to become an auditor of a company, what should be the qualification? So when you will qualify to be eligible for becoming an auditor of a company. Subsection 2 is talking about who should sign the audit report. Who should sign? 145 says auditor should sign. Getting the point? Now auditor means who exactly? 141 subsection 2 says that. So 141 subsection 2 and 145 section we have to read together. We have to understand together. When you are reading only 145, you don't get anything. You need to read along with 141 subsection 2. Now 141 subsection 3, it is discussing about disqualifications. Then 141 subsection 4, it is discussing about subsequent disqualification. What is it? Subsequent disqualification after appointment as an auditor. Getting it? Whether can we appoint a chartered accountant as an auditor? First of all, only if he is eligible, we can appoint. If he is not eligible, we will not appoint. Suppose if the person is disqualified, we will not appoint. What if we appointed the auditor because he originally qualified and not disqualified, we appointed. But after appointment, subsequently he is disqualified. What is the action? So what is the answer? That what procedure we need to follow in that scenario? So that is 141 subsection 4. Getting it? So literally 3 and 4 dealing with disqualifications. 1 and 2 dealing with qualifications. Able to understand? Now you can see directly. You can observe the provision here clearly. What are the qualifications to become a company auditor? An individual is eligible. An individual is eligible for appointment as an auditor only if he is a chartered accountant. Only if he is a chartered accountant. And a firm or LLP is also eligible for appointment as an auditor where majority of the partners are chartered accountants and are practicing in India. Literally here this word practicing in India will confuse many. Technically, CA cannot practice outside India. Technically, CA cannot practice outside India. Can we do attestation outside India? You can do, but who will accept? Getting the point? Suppose you are residing somewhere in the Canada. Some Canadian company approached you and they asked you to verify the financial statements. You verified. You conducted audit as per Canadian auditing standards, whatever frameworks, international auditing standards, everything you did. But your membership number that you got from India, that is not valid there. So you can't attest. What is the sole purpose of practicing mainly? Obviously tell me. Technical purpose of practice means what? To attest. Correct? Without attestation, if at all I decided not to attest, if I decided I will not attest anymore, I will do work, but I will not sign on any report. Do I need practice certificate? Do I need CA qualification first of all? Able to understand? So, practicing in India word, though it is used, technically you need not give much importance to this word. But you know, some senior citizens, while designing MCQs, they will design this also. Getting the point? Practicing in India, option A. Practicing outside India, option B. Option C, chartered accountants, they'll put full stop. Practicing word they won't use. Option D, they'll use some other option. Most accurate option we must choose. That's why you should always read 4 MCQs. You know, when you're reading MCQs, one technique I'll tell you. Generally, what do we think in an MCQ? What do we think in an MCQ? You know, in an MCQ, I'll show you how in an MCQ can be designed. Various combinations. Getting it? Let us look right, wrong, abbreviations. Not right, not wrong. Getting the point? Right is more powerful than not wrong. Wrong is more powerful than not right. Getting it? Every option which you are getting in an MCQ falls under any of these 4 categories. Like one category, permutations, combinations, not wrong, not wrong, not wrong. Getting it? Getting it? Not right, they'll give you. Not right means what? It is not wrong. Straight away, can I say wrong? No, no, but it is not right. For a company, who can become an auditor? A chartered accountant can become the auditor. It's right. It's not wrong. A chartered accountant who is having certificate of practice can become wrong, can become the auditor. It's absolutely right. Able to understand? Some sentences, they are not wrong. Yeah, chartered accountant only can be the auditor. It's not wrong. CA with the COP is right. Are you getting my point? So, option A, the auditor of a company must be a chartered accountant. Option C, the auditor of a company must be a chartered accountant having COP. Option C, the auditor of a company must be a chartered accountant and practicing in India. Option D, the auditor of a company can be any graduate, whatever they may be. Now tell me, A, B, C, all the 3 are right only. Logically speaking, they're not wrong. But C is most accurate. This is how MCQs will be tested. You will not straight away find, this is wrong answer, this is wrong answer, this is wrong answer, this is right. No, it will not be that easy. Able to understand? Sometimes they will give you not right answer or not wrong answers. Getting it? One right answer they will give you. That you need to pick out. Or they'll give you 3 right answers and 1 wrong answer. Or they'll give you 3 not wrong answers, 1 wrong answer. Anyway, you will get. This exercise we will do in MCQ sessions. In MCQ, I will show you how many tricky MCQs you will find. Very tricky. Only if you solve, only if you understand this logic behind MCQ, then only you can solve. It's not how many you solve, it's with what quality you are solving. That is important. Clear? So now look at, an individual is eligible for appointment as an auditor only if he is a chartered accountant. Now, if you look at the word definition of chartered accountants means a person who is defined as chartered accountant as per section 2 of the CA Act 1949. That is what given in the explanation. In 141 explanation is there. So the explanation says that chartered accountant as per ICI Act is what? CA Act is what? A person who is holding certificate of practice. Again here you have, there are 2 words, PRACTI SE, PRACTI CE, practice. What is the most accurate word? Practice. CE is the word. Getting the point? Practice is not a right word. Practice, CE is the word. So a person who is a chartered accountant having certificate of practice, CA in practice means CE. CE is a noun. SE is a verb, adverb. Getting it? So an individual is eligible if he is a chartered accountant. A firm is also eligible. LLP is also eligible. Even you can appoint a firm as an auditor, LLP as an auditor, provided majority of the partners of that firm, majority of the partners of that LLP, they are all chartered accountants and are practicing in India. Able to understand? Practicing in India. Now you see, Companies Act uses the word majority. It uses the word majority, not 100% all the partners. Majority is enough. Indirectly, Companies Act given permission. Indirectly, Companies Act given permission for multidisciplinary firms. For multidisciplinary firms. What is a multidisciplinary firm? In a partnership firm or LLP, some partners are chartered accountants, some partners are cost accountants, some partners are lawyers, some partners are engineers, some partners are architects, some partners are actuaries. A chartered accountant can form partnership with these professions. We have clause 4. Clause 4 of part 1 of schedule 1. Clause 4 of part 1 of schedule 1 to Chartered Accountants Act 1949. Nothing but which we are going to discuss in professional ethics chapter, which is an important clause. A chartered accountant in practice cannot form partnership with a non-member. What is the main provision? A CA cannot form a partnership with a non-member. Exceptions. If at all the other person is an engineer, actuary, architect, LLB lawyer, getting it, or a company secretary or CMA, with them you can form partnership form. Which means a CA can form partnership with these recognized qualifications. Getting the point? That is permitted. But guidelines were not yet given by ICI on this. Though in the Act, they permitted multidisciplinary firm, which means in a particular firm, multiple professional people can involve. Though it is permitted, rules were not framed. Implementation is not yet made. Right now in India, you will find audit firms where 100% partners are chartered accountants. Where 100% partners are who? Chartered accountants. Not majority, 100%. But Companies Act give that relaxation. Majority is enough. Which means Companies Act initially itself permitted. So if a CA firm is having major number of partners, chartered accountants, that's enough. We will call it a CA firm, we will appoint. But our ICA, is ICA allowing this right now? Not allowing. As per the Act, it is permitted. But rules were not framed yet. Able to understand all of you? That is called multidisciplinary firm. There is another word called unidisciplinary firm. Uni means what? Only one. In a firm, all the partners must be chartered accountants. That is what you will find in day-to-day life. Wherever you did articles, yes or no, all the partners are chartered accountants are practicing. Now immediately you may get another doubt. Sir, my partner is there. He is a CA, CMA, CS, a triple qualified, sir. What about that? See, educational qualification is different. Profession is different. I may be CA or CMA, but I can practice only under one profession. If I am having COP under CA Institute, CMA will not give me COP. CS Institute will not give me COP. I cannot practice as advocate. Are you getting the point? Mutual agreements were not yet formed between the institute and others. So right now we can practice only under one discipline. We cannot practice under multiple disciplines. Understood or not? Next. So an individual can be eligible for appointment as an auditor if he is a chartered accountant. A firm is eligible or LLP is eligible if majority or CS with the COP practicing in India. Clear? Now, sir, if a firm is appointed, who will sign the audit report? If an individual is appointed, he will sign, obviously. But if a firm is appointed, which partner can sign? Any partner can sign? No. Only that partner who is a chartered accountant, only that partner who is a chartered accountant and having practice, COP. Getting the point? Certificate of practice, only he can sign. Look, once you qualify CA final examination, you will not become member of the institute automatically. You need to apply for certificate of membership. You need to apply for certificate of practice separately. You need to fill a form for membership. You'll get a membership. For that you have to pay some fee. You can't practice directly. You need to have a license, practicing license. Getting it? Practice COP is a license for you. For a doctor, Medical Council of India will give a license. For lawyers, Bar Council of India will give a license. For engineers, Institute of Engineers will give a license. For actuaries, Institute of Actuaries will give license. For CS, ICI will give license. COP, that certificate is mandatory. Only if you have that COP certificate, you can represent yourself as a chartered accountant. Getting the point? Anyhow, on this, whether can we use a CA word, can I use chartered accountant full form, where we cannot, where we can use, where we are not supposed to use, all that we will discuss in ethics chapter. Getting the point? So COP is mandatory in order to practice, in order to show yourself as a practicing CA. That's it. So these are all manual processes, not automatic. If you qualify as a CA and directly went for a job, you are not a member of ICA. You are not treated as member of the ICA. Getting the point? Anyhow, this will discuss little more in depth in ethics chapter. Next. So if a firm is appointed as an auditor, only that partner who is a CA having COP shall sign the audit report on behalf of the firm. So if any one partner having COP, if he signs the audit report, that's enough. And the person who is ultimately signing the audit report, we call him as what? Engagement partner. Understood or not? So that's about question number 1. Qualification of auditor. 141 subsection 1, subsection 2, both are completed. Easy or not? Then 141 subsection 3. Then 141 subsection 3. This is talking about disqualifications of an auditor. This is talking about disqualifications of an auditor. You see, disqualification means what? They are all chartered accountants. In the below list, we are going to see CS only. They are all chartered accountants. But we cannot appoint him as an auditor. We cannot appoint him as an auditor. Reason? To protect independence. What is the main reason? To protect independence. The person whom we are appointing as an auditor, he must be independent of the company. Correct? The person who is conducting audit must be independent of the company. He must not have any relationship with the company. So he must not have any relationship with the company. He must not have any relationship with the management. He must not be having any investments in the company. Simply he must be unrelated person. Only then his report, his opinion are reliable. Agreed? Only if a person is independent, his opinion is reliable. His opinion is trustworthy. Because of that, the Companies Act gave a list of certain criteria. If at all a chartered accountant is falling under that criteria, we will not appoint him. We will not appoint him because he is disqualified. Why? He is related to the company in some or the other way. Able to understand? Now, what are the disqualifications? The first disqualification is a technical one. A body corporate is disqualified. What is it? A body corporate is disqualified other than LLP. Other than LLP. You see, if you look at LLP Act declares within the Act itself. LLP Act declared that it is a body corporate. LLP Act declared itself that LLP is a body corporate. Able to understand? Now, qualification section says what? LLP is permitted, no? But LLP Act says it is body corporate, no? Now again in the disqualification, if the word simply body corporate if we use, what happens? LLP will become disqualified. So that's why they added other than LLP. Because LLP is a body corporate, they added other than LLP because LLP is permitted. What is a body corporate technically? Body corporate means an entity which have the following characteristics. Perpetual existence. One most important characteristics is perpetual existence. Separate legal entity. Getting it? Separate legal entity and even common seal. Common seal means the body corporate itself can put a stamp. Getting the point? Body corporate will have a separate identity. Or the common seal means what? See, an individual is identified by his thumb or by his signature. However, entity is identified by its stamp, nothing but seal. Getting the point? Now, a sole proprietary concern his seal, his firm seal may not be accepted everywhere. His personal thumb is required. Getting the point? Everywhere, a sole proprietor can be identified or authorized only with his thumb or his Aadhaar OTP or with his signature. But a body corporate, no member is coming forward. It's okay. Body corporate can sign. Body corporate can have digital signature. Are you getting the point? And it is separate from its members. ICI is a body corporate. ICI, Institute of Chartered Accountants of India, is a body corporate. Getting the point? It has separate body. Then it has perpetual existence unless voluntarily liquidated. Liquidation can happen only by law. It is not natural. Partnership Act, if you see, if all partners died and the deed is silent, firm dissolved. Sole proprietor dies, his firm dissolves. Proprietary concern will dissolve. But a company or body corporate, all the members die. Shares will be inherited to somebody and the firm will continue, the body will continue. So that's called body corporate. These are all inter concepts, but still, just since it is there, we are just recollecting. So a body corporate is disqualified. Second one, you see, why body corporate is disqualified is, one more reason is there. It has all limited liability, separate legal entity status, all that. CA, the partner and the firm, they should not be separate legal entities. They should not be treated as separate legal entities because firm is appointed, you are signing on behalf of the firm. You are not putting firm stamp and okay, firm signed. No. On behalf of the firm, you are signing. If separate legal entity concept is brought, if at all we permit a body corporate, best example, suppose I qualified CA, I have another two friends, all three of us qualified CAs, getting it? And all three of us put together formed a private limited company. We three put together formed a private limited company. What happens? Tell me. Now, this private limited company is appointed as auditor of another company. Now tell me, companies, company and members are different. They are not same. Can a shareholder represent the company? No. Can a shareholder represent the company? No. Can a director represent the company? Yes. There is a difference between shareholder and director. If I am a director of the company, I can sign on behalf of the company. But if I am just a shareholder, no, I am nowhere related to the company. Just a member, just a shareholder, investor. That's it. No other relationship I have. Now, if on behalf of company I signed, later some issue arises and all legal issues will come. Unnecessarily, all interpretation issues will come. That's why simply what they decided, let's boycott body corporate. So only those who are individuals or equivalent to individuals, let us permit only them to become our auditor. Everybody else is disqualified. In fact, this disqualification is not required. Because qualification says clearly, LLP or firm only, they can be appointed. So obviously here whether this point is there or not doesn't matter. Logically correct. Logically, whether this disqualification is there or not, it doesn't affect. Because first point clearly says only firm or LLP, only they are eligible. Others are not eligible, no, indirectly. Second one. So, the following persons are not eligible for appointment as an auditor even though they possess chartered accountancy qualification. First one, a body corporate other than LLP is disqualified. A body corporate other than LLP is disqualified. Second, an officer or employee of the company is disqualified. Officer of the company is disqualified. Employee of the company is disqualified. Now, who is an officer? A director, a manager, KMP, shadow director. Shadow director is nothing but they are not officially appointed as director, but they are doing all the activities as a director. Chairman of a company, example, may be treated as shadow director. CEO of a company may be treated as a shadow director. Getting the point? So these are the directors who are not visible. Getting the point? These are the directors who are not visible, but they are actively directing the company. They are actively directing the company. Getting it? Now, an officer of the company is disqualified. Even employee of the company is disqualified. First of all, let us discuss a small basic terms. You know, we have, first of all, company means what? If two or more than two persons, if me, my friend, another friend, three, let us assume three. If three of us are doing business, we can do business without registration. As I told in the previous session also, we can do business without registration. No registration is compulsory. But somehow, we three of us discussed, what if tomorrow we get some fight? What if tomorrow, we must have something in written, right? So we executed some memorandum of terms. What is it called as? It's nothing but actually MOU, memorandum of understanding. So how we three of us together do the business? We understood some, we have written document called memorandum of understanding. Then we approached one chartered accountant. We told our problem. Sir, for his act, I should not be liable. For my act, he should not be liable. For the third person act, we both should not be liable. All three of us are managing business. We three invested, we three managing, both. We are doing both. But each of us are not liable. What is the protection available? Then CA told me, you three of us wrote memorandum, no? Written memorandum, that is not valid. You will be treated as AOP, unlimited liability on behalf of everybody. So then how to bring limited liability? Two options I'll give you. LLP, Companies Act. If you incorporate as a company, you three will become shareholders, you three will become directors. Act of one director, other director is not responsible. For act of another director, this director is not responsible. Simple. And your funds, as a shareholder, you have a limited liability. You can bring additional shareholders also, but they may not be part of management, just a shareholder. So they suggested, okay sir, fine, company option is good for us. We'll go for company. So all three of us, we have our Aadhaar cards, PAN cards, all that. First this CA went and applied for DIN, director identification numbers. Getting it? Then we three of us got three director identification numbers, DIN numbers. Then we three gave some consent. This fellow came, you have a memorandum, no sir? Here also we have a memorandum. Because you three of you together forming as a company. Now this company will have certain terms and conditions. Those terms and conditions are given under memorandum of association and articles of association. We three signed that. And he filed a form, SPICE plus form. Getting it? Simplified pro forma for incorporation of companies electronically. SPICE form. He filed a form. After 2 days he came and showed me, sir, your company is incorporated. Where is the company? Where is the building? No such document. Company means nothing but what? Document. What is the address of the company? Your residential address only we kept as company, registered office. Able to understand? So company means nothing but what? Actually, it's a piece of paper. It's just a bond. It is just a paper. Getting the point? Now, where I am doing the business, how much scale I am doing the business, it doesn't matter. Able to understand? I can have a very big glass building, or I can be running it in a very small, roadside wheel, like what? A small trolley. Getting it? Anywhere I can run. So company means, don't assume it's a very big building, it's a very big, no, nothing such. It's a piece of paper. Now again, after the CA told, okay sir, we'll go for company. Then CA asked me, sir, should we go for private or public? He asked us. I told, sir, I don't know what is the difference. I'm a normal non-finance. I'm not a finance background student. I told him, sir, it is private versus public. What does it mean? What is a private? What is a public? Simple, sir. Private company means three of you or whoever known to you. Getting the point? Only with your consent, somebody can become a member. It's a private. Private means what? Confidential, secrecy. Your affairs are secret. They are not public. Getting the point? Only private people can form this company, private limited company. What is public? Your company ownership is open to general public. If a company ownership is open to anybody can buy the share. Unknown person means public. Are you getting the point? That's why the word public limited company, private limited company. And then I told, no, sir, we don't have any such interest. Let us create a private limited company. Then they filed the form accordingly as a private limited company. Able to understand all of you? Getting the point? So this is reality. Now in this company, who are not eligible? In this company, who are not eligible? Officer of a company, he cannot be appointed as auditor. Employee of the company cannot be appointed as an auditor. Nothing but auditor must be an outsider. Simple logic. Clear. Next disqualification. Here we have given an example. See, Mr. G, a chartered accountant in practice, is a director in one company, RST Limited. Now, can Mr. G, can he act as an auditor of the same company? No, we cannot, because he is an officer of the company. Getting it? See, in auditing standards, we use the word those charged with governance. In management subject, they use the word top management. In Companies Act, they use the word officer. Able to understand? There is another word called key managerial person. Officer, key managerial person, both together we call it as those charged with the governance. Getting it? So on combined reading of 141 and section 2, it may be concluded that CAG would be disqualified for appointment as an auditor of RST Limited. Understood or not? CA, Mr. G, he is a CA and is a director in Jet Limited. He is a chartered accountant in practice and also a director in Jet Limited. Now you may get it out. Sir, can a CA who is in practice, can he become a director in a company? That I will clarify in ethics chapter. We will discuss all what a CA can do, what a CA cannot do. All that we will discuss in ethics chapter. Getting it? So CA in practice is a director, holding company of RST Limited. On reading of these sections, it may be concluded that this fellow can be disqualified for JED, but he will not be disqualified for RST Limited. Based on Companies Act provision, he is not disqualified, because you see here the provision, it didn't talk about subsidiary company, holding company, associate company, all that. It is only talking about the company which is looking for auditor. Are you getting it? But ethics, professional ethics says very clearly, if you are a director in one company, related companies, you cannot act as auditor. That is given by ICA guidelines. We have to follow both. We have to comply. Companies Act, we have to comply that. Suppose Companies Act is permitting, there it is not permitting. Answer is what? Not permitted. In both the cases permitted, then permitted. Clear or not? Next. A person who is a partner of an officer or employee of the company is disqualified. A person who is in employment of an officer or employee of the company is also disqualified. Nothing but partner of an officer of the company disqualified, employee of an officer of the company disqualified, partner of an employee of the company disqualified, employee of an employee of the company is also disqualified. Suppose I am looking for, there is a company called Adani Enterprises Limited. Adani Enterprises Limited. Adani Enterprises Limited is there. This is a company which is actually looking for auditor. This Adani company has on the board 12 directors. Let us assume it is having 12 directors. And all these directors comes within the definition of officer. Now these directors might be having some other businesses, right? These directors might be having some organizations, right? Now in that organization, a CA is working. Can that person be appointed as an auditor of Adani Enterprises? No. Because this CA employer is an officer in Adani. So not permitted. This CA employer is an employee in Adani. Not permitted. So if I am working in an organization, getting the point, and that organization head is a director in another company, officer, Getting the point? In that company, I am disqualified because the person who is controlling me, controlling there also. I cannot act independently. Are you clear? All of you. So a partner of an officer is disqualified, employee of an officer is disqualified, partner of an employee is disqualified, employee of the employee, both are disqualified. Suppose Adani company director, he is having another business. In that you and me, he and CA is partners. Naturally disqualified. He cannot become the auditor. Now you may get another doubt. Sir, how will people identify all this? Suppose I'm a partner of Adani company directors. One of the business is a confidential business. Okay, it is not outside public. Public doesn't know this. I'm a sleeping director. I'm a sleeping partner in that. How people identify? People will not identify. Nobody will check. First of all, I'm telling you, you have to give a self-declaration. You have to give a declaration that, I'll show you. The auditor has to give a declaration that he is eligible and not disqualified. You have to give, a chartered accountant shall give a certificate indicating that he is eligible, not disqualified. You should give a self-declaration. You may get it out. What if I give a wrong declaration? If it is discovered later, you are punishable. That is the only course. We can't prevent, but we can correct. Getting the point? We may not prevent the chartered accountant from violating, but we will punish him if we identify the violation. So that's about disqualification C. Clear, all of you? Clear? Next, come to the disqualification F, I think. Yes, F. A person whose relative is a director. A person whose relative is a director or is in the employment of the company as a director or key managerial person. If my relative is a director in a company or is part of key managerial persons in the company, I am disqualified. If my relative is a director or KMP, he is forming part of the definition of key managerial person, I am disqualified. Getting the point? Now, you see collectively B, C, F. B point, officer of the company disqualified, employee of the company disqualified. Their partner, their employee disqualified. And if my relative is a director or KMP, I am disqualified. Means you see, Companies Act is trying to protect your independence of appearance in so many ways. You should not have any connection with the directors of the company. Only then you are eligible to become the auditor. Suppose if my relative is a normal employee, no disqualification. If my relative is a key managerial person, then disqualification applies. If my relative is just an accountant of the company, I am not disqualified. But if the relative is internal audit head, I am disqualified. Able to understand? Next. So next, fourth disqualification. So a person who or his relative or his partner, a person who or his relative or his partner is holding any security or interest in the company or it's a subsidiary or it's a holding or it's associate or it's a subsidiary of the holding company, then that person is disqualified. In exams, generally when these kinds of questions comes in CA final, frequently this question will come. Earlier it used to come very frequently, but in the past 3 attempts it didn't come. Okay, maybe MCQs might have come, I don't know. If a person or his relative or his partner, a person means the proposed chartered accountant, whoever is becoming the auditor, proposed auditor. Person means proposed auditor. The proposed auditor or his relative or his partner, if any of them are holding any security or interest. Interest is the word which we don't use in India. Interest is the word which might be used somewhere else. It is not used in India. We use the word security. Getting the point? Holding security or interest in the company which is looking for the auditor, or its holding company, or its subsidiary company, or its associate company, or subsidiary company of its holding company. This is actually called as sister company. This is actually called as what? Sister company. Like, what are best examples for this? You can take Tata Group example, which is best example in India. Best example that you will find in India. Suppose you see there is a head called Tata Sons Private Limited. There is a company called Tata Sons Private Limited. This is the ultimate holding company for all Tata Group of companies. This is ultimate holding company for all Tata Group of companies. How many of you have started FR coaching already? Consolidation topic over? Consolidation topic? You'll understand better if it is over. Anyhow, otherwise also I'll explain you clearly. Tata Sons is called as ultimate holding company. Now you see, this Tata Sons Private Limited is a holding company for more than 20 listed companies in India. More than 20 listed companies in India. I think that 29 or 30. I'm not sure exactly. Getting it? You can see that in Tata Sons website. Now, Tata Consultancy Services Limited, Tata Motors Limited, okay, Tata Chemicals Limited, Tata Steel Limited, Tata Power Limited, Tata Beverages Limited. So many Tata Group of companies. Tata Power Limited. So many Tata Group of companies were there. Tata Beverages is there. Now, who is investor in majority of these companies? Tata Sons. In Tata Sons, major investors are whom? Tata Trust. There are many trusts which are there. Tata Trust. Getting the point? That's why people, you might have seen in Instagram or somewhere, most of the revenue generated by Tata will go for charitable trust. Because charitable trust is the owner. Able to understand? Now, for TCS, the parent is Tata. For Tata Motors, the parent is Tata. For Tata Chemicals, the parent is Tata Sons. So for all of them, there is a common parent. We call these companies one together. They're called as sister companies. They're called as what? Sister companies. Getting the point? Now, what is the disqualification says? What's the disqualification says? The disqualification clearly says, if I am holding any shares in Tata Sons, or it's a subsidiary company, sir, some 25, 30 subsidiary companies were there. Getting the point? Let us assume Tata Consultancy Services is looking for auditor. Let us assume Tata Consultancy Services is looking for the auditor. Now, what is the condition? I should not have shares in Tata Consultancy Services. I should not have shares in Tata Sons Holding. I should not have shares in TCS, a subsidiary. I should not have shares in TCS associate. I should not have shares in TCS sister companies. Getting the point? How many sister companies? 30, 40 might be there. If I do not have shares in entire this group, then only I am eligible to become the auditor of TCS. Are you getting the point? Only then I am eligible to become the auditor of Tata Consultancy Services. We call entirely as group company. Now you see, they used the word security, not share. Security is defined. Security word is defined. Security means what? Security includes the securities as defined under Securities Contract Regulation Act. SCRAW. Security contract. Now what are security? There's so many. It has 10 clauses. Security definition has 10 clauses. First clause is talking about shares, debentures, all that. One clause is talking about bonds. Another clause is talking about derivatives. Another clause is talking about units of a mutual fund. So many. Directly or indirectly, you are holding share or you are holding mutual fund. Doesn't matter. You're disqualified. Are you getting the point? All of you. And see, not only you, your relative should not have, your partners should not have. Getting the point? You should not have security. Your relative should not have security. Your partner should not have security in the company or associate holding all that. Able to understand. Now in exam, whenever this question comes at CA inter or final, what students write in provision, you know? What students write in provision? If a person is holding shares in a company, then the person is disqualified to become the auditor. In the given case, they'll write the answer. It's correct answer, but he'll not get full marks. It's correct answer, but not complete answer. When you will get full out of full, only if you write complete provision. What is the complete provision? What suggested answer looks like, you know? If a person or his partner or his relative is holding any security or interest in the company or its holding company or its subsidiary company or its associate company or subsidiary of its holding company, then the person is disqualified. This is the provision. What this fellow wrote? The person is holding security or shares in the company, the company, then he is disqualified. This is what he wrote. It's correct answer, but not complete answer. That's why he'll get 2 out of 4. Those who write full sentence like this, they'll get 4 out of 4. Clear all of you? Now, for this, they have given one exception. For this entire provision, there is one exception. What the exception says is, relative can hold, relative can hold securities up to a face value of rupees 1 lakh. Relative can hold securities up to a face value of rupees 1 lakh. This is the exception. Now, they used the word in the company. They used the word in the company. ICI material, study material, they gave clarification on this. Getting the point? In the company means, in our example, what is the company we are looking for? TCS. What is its holding company? Tata Sons. What is its associate company? Some infotech company. That's associate. What is its subsidiary company? Some Tata related, some other company. What are its sister companies? Tata Motors, Tata Power, Tata Steel, Tata Beverages, all this. Now this company is looking for the auditor, right? I should not have shares in that company, holding, subsidiary, associate, sister. Correct? My relative also should not have, generally. My partner also should not have. That is the main provision. What exception says? Relative can hold securities up to face value of rupees 1 lakh in the company. They use the word in the company, right? Exception. In the company, relative can hold, right? In which company? TCS he can hold. If at all relative is holding in other group companies, is it permitted? Not permitted. That is what given in the ICI material. If my relative is holding in TCS up to 1 lakh, it is fine. If my relative is holding in other group companies, no, not permitted. I am the auditor of TCS. In that company, you can have up to 1 lakh. That is permitted. In other companies, it is not permitted. That is what ICI material also clarifies. But the logic interpretation is not correct. Logically, that interpretation is not correct. It's a blunder. Very simple logic. I am auditor of TCS, right? In that company, you are permitting my relative. Other companies where I am not the auditor, how can you prohibit? Logically, this is not correct, no? Are you getting the point? Here, in the company is a general ending. It's not technical word. In the company means not a technical word. See, I'll show you the act also, how it is looking like. Now we'll see 141 subsection 1. So what is that section? 141, right? Now you see here, a person who or his relative, correct? A person who or his D point you see. D point you see. Visible? Okay. A person who or his relative or partner below first point is holding any security or interest in the company or it's a subsidiary or it's holding or subsidiary. That and all fine, right? Provided that the relative may hold security or interest in the company. They didn't use the word here. The word has any relevance? I'm asking here. THED is there? No. Is there any relevance? Is there any technical relevance to it? No. See, above I referred list of companies. Below I simply said, however, relative can hold up to rupees 1 lakh in the company. Company means what? Entire list. Relative can have securities up to 1 lakh in the entire group together. Together 1 lakh up to. But study material clearly says, relative if he is having securities in the company only, not disqualified, up to 1 lakh. If relative is holding securities in other companies, disqualification will apply even if it is less than 1 lakh. That is what the CA final ICA study material clarifies. That is absolutely wrong interpretation. Just because EA Institute give it is not right. Ultimately, there is another person sitting and then doing that. That's a blunder. Over interpretation, too much of interpretation. I think the point. Now you see here. Have you all understood this provision clearly? That's it. So the relative of the auditor, what is it? The relative of the auditor may hold security or interest in the company for an amount not exceeding face value of rupees 1 lakh. Getting it? Now, the limit of rupees 1 lakh would be applicable where securities are held in the company only. This is the institute material says. This is what you have to write in suggested answer also, in exam also. But logically, it's a wrong interpretation. Getting the point? Logical, it's a wrong interpretation. Sir, what is this grace period? I will get back to that later. Subsequent disqualification I will be discussing. At that time, I will get back. Sir, okay, up to 1 lakh face value security. What if that is a company limited by guarantee? In that case, we will see guarantee value. Suppose the limit of 1 lakh shall apply even for a company not having share capital. Suppose if a shareholder gave guarantee at the time of incorporation, then guarantee value should be up to 1 lakh. Clear or not? Suppose if auditor is holding security in his name or in the partner name, is the limit applicable rupees 1 lakh? Is that 1 lakh limit applicable? No. 1 lakh rupees limit applies for whom? Relative only. For whom? Only for the relative of the auditor. Sir, I am a CA. I am holding securities of just 1,000 rupees in the company. Disqualified. My partner is holding. Disqualified. My relative is holding. Up to 1 lakh permitted. Only face value. Look at the words user is face value, not market value. Market value can be 100 crore also. 1 lakh face value. Market value can be 1 crore, 100 crore also. MRF is there. Share price is somewhere trading around now. I'm not sure exactly. Once it used to be traded around 75-80,000. Face value 10 rupee. What is the market price? 80,000 rupees. Almost 8,000 times. Almost 8,000 times more than. Sorry, 8,000 times more than face value. Market value is irrelevant for us. We only look for face value because voting power is decided based upon face value or market value. Simple logic. Able to understand? Whether voting by show of hands or whether voting by poll, whatever it is based on face value, not relevant for market value. Clear? Next. So that is subpart 1 of 4th disqualification. So if a person or his relative or his partner holding any security or interest in the company or its holding company or its subsidiary company or its associate company or subsidiary of its holding company is disqualified. However, relative of the auditor can hold securities up to face value 1 lakh in the company. This limit do not apply for the auditor himself and his partner. And if the company is not having share capital, 1 lakh limit still applies in case of company limited by guarantee. Clear all of you. Now 1 lakh limit shall be counted. 1 lakh limit shall be counted for all my relatives together, not per relative. Suppose my wife is holding 90,000, my brother is holding 90,000, my another brother is holding 90, all together 2 lakh 70, disqualified, face value. Take the point, all of you. That's it. Now you see, who is a relative here? Who is a relative? Generally, in here we have given relative definition. Huh? We didn't give. Yeah, it is here. Relative means what? If at all it is HUF, every member of HUF is a relative of another member of the HUF and for the HUF. Suppose for anybody else, husband and wife are relatives to each other and one person is related to another in the manner given below. So your spouse is relative, your father is relative, mother is relative, brother is relative, sister is relative, son, son's wife, daughter, daughter's husband. Grandchildren, grandparents not covered. Are you getting it? Now some stupids interpret more. Here, you see here, actually for son, stepson is covered. For daughter, stepdaughter is not covered. These are all stupid observations. Don't observe all this. Getting the point? Sometimes they will miss while drafting, but the intention is step also. For daughter, stepdaughter is not covered. No, important and no, nothing such. Getting it? So, this much in-depth observation is not required, and moreover, that is not the intention of the law. That is not the intention of the law. Sometimes when they are drafting, they miss at some places. I will show you how many drafting mistakes in company, these sections, whatever sections I am going to read, some 4 or 5 sections, I will show you how many mistakes they do. Getting it? That's it. The context is important, not each and every word, all that. Next. Second disqualification, same. A person who or his relative or his partner, if they are indebted, getting it? If they are indebted to the company or the group companies, this is a word used by me. But actual words are, it's a subsidiary, it's a holding, it's the associate or subsidiary of the holding. You need to write in exam this full sentence. I simply used for the sake of convenience group company word. In exam you must use fully. Clear, huh? All of you. Now what are they saying? A person or his relative or partner, if they are indebted to the company, in excess of 5 lakhs is disqualified. In excess of 5 lakhs, if at all we are having indebtedness together, disqualified. Now, okay, indebtedness means what? Suppose I'm an auditor of a company. I want to become an auditor of a company. From that company, I regularly buy goods on credit. I regularly buy goods on credit and repay whenever time comes. This company also gave me credit just like any other customer. This company gave me credit just like any other customer. If some new customer go and ask for credit, they will do some assessment, credit appraisal. They will do some credit assessment, reliability assessment, all that, and finally they will have some credit team. They will approve some limit. That much limit only they will give to him. Same way for me also they gave. For me they gave 7 lakhs credit limit. I purchased goods on credit up to 7 lakhs. Best example, some Muthoot Finance or some Canara Bank or some Karur Vysya Bank you take. I want to take gold loan. Okay. So whatever jewelry I have in home, I took the jewelry to the Canara Bank one branch. So that day some rate is prevailing. Per gram this much loan we will give you. Some rate is prevailing. Now there is one appraiser. Getting it? He assessed my gold quality, weight, all that. He calculated all that. And finally gave me 7 lakhs limit gold loan. He finally agreed for 7 lakhs. If any other customer go also same process. Just like any other customer only they gave me. Are you getting the point? Take Muthoot Finance, best example. Take Muthoot Finance. So they gave me just like any other customer. I took 7 lakhs loan. You know, what is the value of gold I kept with them? 12 lakhs. What is the value of gold I kept with them? 15 lakhs, maybe 15 lakhs. But I only want 7 lakhs. I took 7 lakhs. Now, Muthoot Finance is looking for auditor. I'm having CA qualification. My profile got selected. They sent me a proposal. Now, can I accept the auditor? You're indebted for more than 5 lakhs? Yes. That's it. You're disqualified. Sir, I gave security 15 lakhs worth. Doesn't matter. Ignore. Are you indebted to Muthoot Finance? Yes. How much? More than 5 lakhs? Yes. Disqualified. That's it. No more argument. Sir, I was treated like any other customer. Ordinary course of business. No excuses at all. Simple logic. Are you indebted? Answer, yes. More than 5 lakhs? Yes. Disqualified. That's it. No other exception. All of you. Next. So, you see here. If an auditor purchases goods on credit from the company for a value exceeding 5 lakhs, he is indebted to the company. Immaterial that the credit period allowed is same like any other customer. Sir, I was given credit like any other customer. That is immaterial. It doesn't matter. You're disqualified. Are you clear? No. Okay, fine. I don't have any indebtedness. Me, my family members, my partner, all of us together, less than 5 lakhs only indebtedness. Not more than 5 lakhs. I'm eligible. I was appointed as an auditor. Now I quoted an audit fee of 10 lakhs. I quoted an audit fees of how much? 10 lakhs. I told on day one, only if 10 lakhs is given to me in advance, I will start the audit. Company gave me 10 lakhs rupees audit fees as advance to me. Now tell me, it's not a remuneration payment, it's advance remuneration. Understand? The remuneration which I received is not post completion of the work, but before completion of the work. Hence it is called as advance. Now advance is nothing but an outstanding liability. Advance received from customer is a liability, correct? Like India is advance received from a service receiver by a service provider is a liability. Now indebtedness more than 5 lakhs, it's qualified. So even if you take audit fees before you do the work, that is also treated as indebtedness. So how can I take audit fee? If you recover the audit fee on a progressive basis, even though the audit is not completed, it is not treated as indebtedness. Progressive basis means what? I complete little percentage of work, then I will take the fee. I will take advance, but it is not more than 5 lakhs. And I will do some work, take fee. Will do some work, take fee. Make sure that you are doing something and taking the fee. That is not treated as indebtedness, and that is called progressive basis. All of you understood or not? No. There are few more clarifications. Market shares, for shares, no. 1 lakh is face value and not the market value. Here all of you. Now you see certain illustrations. Mr. Avi, a practicing chartered accountant, is holding securities of XYZ Limited, having face value 990. Whether Mr. Avi is qualified for appointment as an auditor of XYZ Limited, he himself is having securities, so disqualified. You see here, the provision is given fully. Getting it? The company, subsidiary, holding, associate, subsidiary of such holding, entire provision is given. In exam, students do this mistake. They simply write, if a person is holding securities in the company, then the person is disqualified. In the given case, Mr. Ravi is holding 990 worth of securities, hence he is disqualified. Your answer is right, but 2 marks only you will get out of 4. Because you are not writing full provision. Getting the point? So observe, entire provision you have to write always. Mr. PK is a practicing chartered accountant. Mr. Q is a relative of Mr. PK. He is holding securities in ABC Limited, having face value 99,000. Since it is less than 1 lakh, Mr. PK is not Disqualified. Whether Mr. PK is qualified for being appointed. Yes, he is qualified, not disqualified. Now, how you should write? If as per provisions of Companies Act 141 subsection 3, if you remember section number clearly, only write. Otherwise, as per provisions of Companies Act, if a person or his relative or his partner is holding any security or interest in the company or holding company, subsidiary company, associate company, a subsidiary of its holding company, then the person is disqualified. However, relative can have securities up to rupees face value of 1 lakh in the company. In the given case, Mr. PK is the proposed auditor for ABC Limited. In the ABC Limited, Mr. Q within bracket relative of Mr. PK is holding securities rupees face value 99,000 within bracket not exceeding 1 lakh bracket close. Hence, Mr. PK is not disqualified. Underline the word not disqualified. Are you getting the point? You see, this is how you should present in exam. I gave this answer keeping in mind how you should present in answer. In examination also, you see here, a person is disqualified for appointment if relative or partner is holding any security in the company or group company. So relative may hold up to face value not exceeding 1 lakh. In the given case, he is having securities worth 99, which is as per the requirement, and hence he is not disqualified, eligible. You need to underline key point in every line. By reading the underlined points, I should understand what you wrote. Make valuationer job simple. Getting the point? Valuationers in all our CA exams, every exam also, not just CA exam, in every even BCom exam also, first only people write answers. Okay, so in every exam, valuing first paper is easy. Valuing 10th paper is little difficult. Valuing 20th paper is little difficult. If at all your paper is somewhere on 25, understand, imagine. If your paper comes to the valuationer at 25th, he will not be valuing it with the same level of enthusiasm. Yes or no? Where he valued in paper 1. And now moreover, it's a digital evaluation. Digital means nothing but I will have a tab. Paper will be scanned and sent to me. Now I'm highlighting digital, not on a book. On digital I'm highlighting. That's it. Digital valuation means that only. What I will do? I'll have suggested answer. I'll see here. Every line I'll see, is it matching or not. Matching means not absolutely. Meaning should convey. Meaning should convey. Getting the point? If the meaning is coming, that's enough. Obviously, technical terminology we have to use. Without that, there is no substitute. No. For technical terminology, do we have a substitute? No, obviously meaning should come. See, financial reporting framework, is there any alternative term? Obviously you have to write that. Without writing that, you can't fulfill the answer. Correct? So, meaning should come. So that is what they will look into. And in suggested answer, they would have given some 4 or 5 words. Holding company, associate company, subsidiary company, all of that. He will observe whether it is there in your answer or not. And accordingly, he will allocate marks. Are you getting the point? So, if your answer is very neat, legible, legibility should be there. Your handwriting need not be excellent, but your handwriting, by reading, I should simply understand. I should not focus it. If you are writing in such a way where I am taking huge stress to understand your answer, then your paper is in risk. Valuing a right answer is easier than valuing a wrong answer. If a student wrote an irrelevant answer, it is difficult for me to read and interpret that it is wrong. If a student write a right answer, it is easy for me to identify. If a student wrote a wrong answer, we can't, it will be irritating for the examiner, which will have a cascading effect on your next answer. Clear? So be careful. Next. Messrs. Bhavin and Co. It is an audit firm having Bala and Chendu, 2 partners. There is Mr. A, who is relative of Chendu, means partner's relative, is holding securities of AMD Limited having face value rupees 1,100,000. Whether this fellow is qualified for appointment as an auditor? Obviously not. The relative of the partner, relative of the person or relative of the partner, both are disqualified. Person should be interpreted as partner in case of partnership firm. Getting the point? So the answer. So obviously disqualified. You clear? Now this is again a similar question. Mrs. Raja Mohan is an audit firm having, Ms. C.A. Raja, C.A. Mohan. The firm has offered the appointment as an auditor for the financial year 1920. Mr. B, the relative of Raja, is holding 8,000 shares, face value 10 rupees each, market value 1,60,000. Is market value relevant? No. In provision, no. Right, entire provision. Additional point. Market value is not relevant. What is relevant is only face value. This sentence also you should write. In the given case, Mr. Raja Mohan is not disqualified because he is holding securities within the limits mentioned within bracket face value of not exceeding 1 lakh. And here you should write an extra point if possible. The market value is not a relevant factor. Market value is not a relevant factor. You can write this point also. You can even mention that market value is not a relevant factor. Clear or not? All of you, every line in examination, you must underline some key point. Don't underline for namesake. Underline cleverly. Every line. I should feel very easy when I'm reading your paper. See, I'm an auditing faculty. If I read your paper, I can understand your intention. But the person who is valuing the paper is not at all from teaching profession. He's just a CA who forgot all the provisions long back. You know who can become valuationer? Only after completing 4 years of COP. 4 years of COP completion means what? Forgetting everything. So I am new to the subject. When I'm valuing the paper, I'm completely new to the subject. I don't know anything. Adjusted answer is the only pace for me. Okay, so be careful. Then inside that, another provision. See, it's a very simple question. It's a guarantee as defined under Contract Act, not guarantee company. Company limited by guarantee is there, no, not that guarantee. Here guarantee means what? Guarantor, guarantee, contract of guarantee, that guarantee. Understood? You know, right? Surety, guarantee, that guarantee. So if a person, chartered accountant or his relative or his partner, if they gave a guarantee to the company on behalf of somebody else, if that fellow did not pay, I will pay you. That kind of guarantee, if at all the auditor or relative or partner, if they gave to the company in excess of 1 lakh, disqualified. It may be to the company, holding, subsidiary, associate, or even sister company. Doesn't matter, disqualified. No exception, nothing. Clear? It's an easy point. Company limited by guarantee is different again. There, it's a company guarantee. It's a security, investment related guarantee. Understand? It's not a contract of guarantee. Here, all of you. So with this, fourth disqualification is also completed. I hope everybody understood, all of you. That's it. Okay. Just take few minutes gap. Just to go through that in the smart notes given to you once. Just to go through these four, A, disqualification A, B, C, D, F. We covered these 5. E we did not cover yet. Okay, just to go through these 5. Immediately, if you observe, we are solving the examples also immediately, practical questions also immediately. See, simply if I have to explain you how powerful this book. I told, right, I'm not doing anything great in this book. Very simple. We do follow ICI book completely. While preparing this book, we follow ICI book. We do incorporate all the ICI questions, everything. If you observe at the end of this book, just a minute, I'll show you how many practical questions we have. So you see here at the end of this book, we have some practical questions, some 8 questions we have. We have some 8 practical questions on company audit. Okay. Now, once again at the end of audit report, I told, right, audit report and company audit put together one topic. Standards, audit report, company audit put together one segment. Getting it? Company audit report, for convenience, it is 2 chapters, but it's one topic as a whole. Okay. Now, audit report at the end we will go. Now you see here, We are having how many illustrations here? Approximately 10 illustrations. Sorry, 11 illustrations. In audit report, we have how many illustrations? 11. Before these illustrations, we have practical questions also separately. Remember, practical questions are not main questions. Main questions means the provisions. Main provisions we will discuss as question and answer format. At the end, we will have practical questions and illustrations. Practical questions, you see, 24. This is excluding main content. Main content means what? Original text. You see here. So here it will start. Practical questions heading will be there. You see, additional concepts and practice questions. Before this, up to 108 page, it is only concept. It is only concept. Able to understand? Now we'll see question bank. I'll show you question bank. You see, first in question bank, company audit and audit report put together I gave in one page, one segment. Getting it? Here you see how many practical questions we have. We have so many practical questions and additional concepts. Almost we have how many? 18. 11 illustrations we have. 20 plus practical questions we have in the main material. 18 additional questions we have here. Solving. In addition to this, while reading the concept below, examples we have. So we are solving in multiple ways. All this we will cover in class. You don't require to read any other question bank outside. If you strictly restrict to this book, whatever the book you are getting, that's more than enough. In fact, I'm telling you, this question bank is not updated. Right now, it is January 3rd, 2023. Getting it? This question bank is not updated. But by the end of this month, we are updating this question bank. This question bank contains examination questions up to May 21 attempt. May 21 or maybe December 21. Not December 20, November 2020. Getting the point? January 21 attempt is there, no? January 21 attempt to questions were covered. May 21, December 21, May 22, November 22. These 4 questions were not updated in this. We are going to update that. In these past 3-4 attempts, MTPs, RTPs we didn't update. We are again updating. All that we will be discussing when we are discussing question bank. So literally, if you cover my main lecture and question bank, MCQs, more than enough. And we are doing it entirely within this 140-150 hours. Revision extra 20-25 hours. That is different. That everybody has to spend for every subject. Clear? Confident? So pay attention to the class. That is more than enough for you. So just to go through these provisions once, hardly few minutes left. Okay, just to go through this, we'll continue the balance provision in the next session. So I'll be waiting here 5 minutes. You please read immediately whatever we read. Hardly we covered 5 disqualifications. You can understand easily now. If you read immediately, it will be very easy for you to remember. And one more thing, don't read for namesake. You know, many of us do read, like we just see the book peripherally. Like we just simply see the person whose relative partner holdings equities, all that, like this. You know, you're looking at the book on a lighter note. If you read with a lighter note, you don't understand, you don't remember. Whenever you're reading, how I am reading when I'm explaining you, after I explain you, I will read the material and explain you, right, connect you, right, with the example, with what level of stress I am reading, same you have to read. One time you read like that productively, it is having high impact. Many students do read on a lighter note. They just read for namesake. Getting it? That's it. So carefully each and every word, observe, process and read. That's it. So we'll continue balance in the next class. Just go reading with this.